welcome to this new video of Head Start. So the good news is that SEBI has proposed a new norm for investment advisor and research analyst. Anybody who is interested now in making a career as an investment advisor will have to follow the compliance as per the new norms, and regarding that a consultation paper on the review of regulatory framework for investment advisor and research analyst has been proposed by SEBI this very day. So let's see what's in the offering. The objective of this regulatory environment is to seek comments from public on proposals intended to put in place a conducive regulatory framework. It was felt that the stringent norms of the investment advisor and regulatory research analyst was so stringent that people were not able to spend 5 years in the sector to get registered as a SEBI advisor. That was prohibiting many young talented professionals. Keeping that thing in mind, SEBI has now proposed a new regulatory mechanism, and that is open to feedback from the public at large. So as per the notification of January 21st, 2013, certain amendments had to be made. The new success saga of Indian stock market is different from what it was a decade back. So we now are at par with an average USA investor. However, the norms have not been updated and modified, keeping the volume of the market. The research report recommendation will have to be based upon the new norms, for which SEBI is open for feedback. Why the need of such a regulatory framework for investment analyst or research analyst? Over the last few years, owing to the growth of essential securities market and technical advancements, the market has seen a considerable increase in the domestic investor base. However, the number of investment advisors and research analysts today is not commensurate with large investor base. Also, the ratio of investment advisor per million population is very low as compared to jurisdictions such as USA. This has led to proliferation of many unregistered entities who are acting as investment advisor and research analyst. This has also resulted in many market frauds. Many gullible and innocent investors have lost their hard-earned money to such schemes and scams of those unregistered entities. Now it has been felt necessary that the services of IAs and RSs will be available to wider number of investors, provided SEBI makes the registration process a lot easier. Now, in order to cater to the needs of the large number of investors in the country and the potential for growth in wealth creation for investors, a much larger number of investment advisors is required. Now, to align and put in place a regulatory landscape conducive and commensurate with the continually evolving nature of businesses, investment advisors and research analysts are required to ease and reduce cost of compliance. Now, based on the recommendation of the working group on review of regulatory provisions for RAs and for IAs, the recommendations of that working group, representation from industry association and internal deliberations, regulatory changes as explained, is going to be proposed hereafter. The qualification specifically in order to attract the young minds towards this profession of IA and RA and to enable the ease of entry for persons intending to provide investment advice research services within the regulatory ambit of SEBI, it has been proposed to relax the existing minimum qualification requirement for registration as IA or IRA from a post-graduation to a graduation degree. So earlier you were required to have MBA in finance or a certified chartered accountant. Along with that, you were required to have 5 years of experience working in the domain of advisory firm. Now that has been done away with. Now simply a graduation degree would be suffice, and the post-graduation degree is done away with. Along with that, you are required to have certification in order to be qualified and certified SEBI registered. IAs and RAs have been raising concern that the requirement to obtain the base certification afresh every time to keep registration in force creates uncertainty of business continuity. So earlier the provision was that once you got registered by passing NISM Series 15 and NISM Series XA of SEBI, once you pass the exam, you have to keep yourself updated every year or after every certain couple of years or maybe 5 years of time. That was kind of annoyance for many of the experienced research professionals. Now SEBI has proposed that once you pass the examination, you no longer have to keep yourself updated every time by taking up the examination. You simply have to keep yourself updated by the existing norms. Whenever some new changes are proposed in the market, SEBI will ensure that you attend the courses or seminars or maybe some written communication, and that would be suffice. In order to address those concerns and to simplify compliance requirements while maintaining the standards of knowledge and skill commensurate with the requirements of IA and RA professions, it has been proposed that those people shall be required to obtain base certification only initially at the time of registration, and then afterwards they will be required to obtain a certification that will be based only on incremental changes or developments during the previous 3 years or a period of time as may be specified. So the good news is that you do not have to take up the exam every year in order to be called a certified research professional. As regard experience, there will be no requirement of experience for registration of IA and RA. As I distinctly remember, earlier to be registered as an investment advisor, you were required to have a minimum post graduation in the area of finance or maybe qualified chartered accountant. In addition to that, you were required to have 5 years of work experience. Now you do not require any work experience at all. It is also relevant here to draw a comparison between the experience requirements under the SEBI Regulation 1996 and SEBI Regulation 2012. The current experience requirement under IA regulation and RA regulation, no specific experience requirements have been prescribed under SEBI Regulation 1996 for directors and key personnel of mutual fund asset management company, even though there is retail investor participation. Likewise, experience requirements have been dispensed with for key investment team of manager of alternate investment fund under the SEBI regulations 2012 and have been replaced with comprehensive certification requirements. Considering that the certification requirement for IA and RA shall ensure that IAs and RAs possess relevant knowledge and skills desired to provide their services, it is proposed to dispense with the experience requirement for registration as IA and RA. SEBI is of the opinion that once you qualify their certification exam, that is enough for you to work as a working professional. There are some issues with the net worth of the individuals. Now here are the proposals. This table will summarize it all. Now existing regulatory provision for IA is that you have to have postgraduate degree or diploma in specified field or CFA or a PG program from NISM. Again, as regards research analyst, you have to have postgraduate degree or diploma in a specified field or graduate with experience of at least 5 years in a specified field. For employees of proxy advisor, graduate in any discipline would have been suffice, and that is very evident when you see the research report of many brokerage firms. Whenever they are publishing their research report, many are coming with qualifications like MSc or many are coming with MCom, BCom. Nothing to do with MBA in finance or maybe postgraduate diploma degree in accountancy. You are required to have an experience of at least 5 years for individual investment advisor and principal officer of non-individual investment advisor. The new proposed regulatory changes for IAs and RAs is such that for qualification for IA RA partner, principal officer of non-individual, a graduate degree or a postgraduate degree or diploma or professional qualification in a specified field or PG program from NISM or a professional qualification by obtaining a CFA charter from the CFA Institute would suffice. For person associated with investment advice research service, graduate degree in any discipline would be sufficient. For employees of proxy advisor, graduate degree in any discipline would be required. As regard experience, there shall be no requirement of experience for individual IAs, RAs or the partners or the principal officers or persons associated in case of non-individual IAs and RAs. certification requirement has also been made more stringent, considering the view that you do not require to work for at least 5 years in order to get your certification done. Now, the proposed regulatory changes for certification is that for certification from SEBI, from NISM or any other organization, institution or any other recognized stock exchange in India, provided such certification is aggregated by NISM. IAs and RAs shall be required to have base certification like NISM Series XA and XB for IA and NISM Series XV for RAs only initially at the time of registration as IA and RA. There shall be no requirement of obtaining base certification subsequently. So once you have obtained the certificate, you are done for the lifetime, provided that you keep your knowledge updated with changing scenario of the security market. They are required to obtain certification which shall be based only on the incremental changes developments during the previous 3 years or a particular period of time as may be specified in the regulatory and professional space concerning ISRS. These incremental changes developments will be required to be obtained before expiry of validity of previous certification. Now, the catch as regards the minimum worth requirement in the existing regime is that an individual was required to have a personal asset of a minimum of rupees 5 lakhs. The good news is that in the new regime there won't be any requirement of any of the net worth. For non-individual or body corporate, you were required to have 50 lakhs for IA and 25 lakhs for RA. Instead, in the new proposed regulation, the investment advisor and the research analyst are required to maintain a deposit lien marked to stock exchange recognized as IAASB or RAASB for such a sum as may be specified by SEBI from time to time. As of now, if some investment advisor or research analyst is having up to 150 clients, the IA or RA is required to maintain a cash deposit of rupees 1 lakh in SEBI. For clients ranging from 150 to 300, it is 2 lakh, and from 300 to 1000 clients, it is 5 lakhs. And if you have clients numbering more than 1000 and above, it is 10 lakh. The reason why these amounts are to be registered or to be deposited with SEBI is that in case of any dispute arising between client and the advisor, SEBI will have a final say, because of which you are required to deposit a part of your sum with the SEBI. Now, allowing registration as both investment advisor and research analyst, it was felt that there is a demand from the ISRS to allow them to provide both IA and RA service to their client, as the activities under these services are overlapping in nature, and there is a significant overlap between these two. Most of the time the investment advisor is also the research analyst, and based on the research activities he or she is capable of tendering advice to his or her client. Now, for RA you are going to charge separately, and for research you are for pretty much of the time paid next to nothing. In order to make a separate distinction between these two, SEBI has come up with a new proposed formula where individual or partnership firm may be allowed to seek registration as both IRA, provided they shall comply with the rules, regulation, reporting requirement under each of these regulations separately. So that the purport is that if you are suggesting something to your client and you are charging him or her as an investment advisor, you are going to charge separately as an investment advisor, and as a research analyst you are going to charge him or her separately. There are specific provisions for that also. We'll see it later. These RA will be required to provide undertaking stating that they shall maintain arm's length relation between their activities and IA and RA, and shall ensure that its investment advisory service and research services are clearly segregated from each other, as I have already explained. Though SEBI has come up with new idea like registration as part-time investment advisor or research analyst. Now that's a very tricky thing, because many of the people are not full-time research analyst or investment advisor. Many are working in financial firm, many are bank employees, or many are in non-banking financial entities, NBFCs as it has been called. So in that case there are provisions which have been laid out. There are more than 16 or would say 10 categories, and within those 10 there are very many subcategories also, for which there has to be a compliance, allowing appointment. Rest of the things I'll explain to you in the upcoming videos. Till then, stay tuned with Head Start. Thank you.